Welcome back to Alpha Recap. I'm glad you joined us. Quick heads up, this episode is recorded after the close, and we'll walk through what happened in the markets today. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Today felt like a bit of a pause. Markets closed marginally lower overall. The broad S&P finished essentially flat, down barely a hair, while the tech-heavy Nasdaq finished down just under 0.5%. Meanwhile, small-cap names actually finished up, roughly 0.5% higher. So, mixed tape, but with a clear tilt away from the biggest tech names.
So what really stands out here is that narrow leadership, right?
Exactly. When the big index barely moves, but the Nasdaq underperforms and small caps outperform, it points to selective rotation. Traders were moving money out of the mega tech names and into smaller, more cyclical or news-driven pockets.
Give me the headlines. What pockets of the market actually did well today?
Cannabis stocks got a lift. Policy progress and stronger retail metrics created a clear tailwind. Consumer and retail pockets showed momentum too, helped by AI ad solutions and calendar events like Prime Day. Utilities and real estate were generally stable, playing the defensive card, and materials and industrials bounced around on commodity news. Energy and financials were basically range-bound.
Yeah, that tracks. I want to pause on cannabis for a second. It's always such a headline-driven group.
It is. When you get legal or regulatory wins that intersect with better retail numbers, you often see episodic rallies. Traders treat those as binary catalysts. Policy headlines unlock flows into the sector.
Okay, and the market internals. What did they say about today?
The internals reinforced that rotation story. The tech-heavy index underperformance was essentially profit-taking or follow-through selling in large-cap tech, while small caps ticking up suggested traders were hunting for higher beta or redeploying gains from mega caps into more cyclicals.
Right, so would you call this risk off or just rebalancing?
I'd call it rotation, not panic. The averages were barely changed, which is consistent with rebalancing. But there is a caution flag. When leadership narrows and fewer names carry the market, headline risk rises. A single large cap stumble can tug an index lower quickly.
Let's talk sectors a bit more. You mentioned consumer, utilities, materials. Any notable moves?
Materials and industrials were mixed as commodity dynamics bounced around. Plastics and copper were in focus, and there were chatter points about rare earths tied to longer-term supply concerns. Utilities and real estate acted like defensive anchors, mostly stable, but trading on yield and risk-off impulses. In consumer, ad tech and retail benefited from the calendar and AI ad momentum.
And energy and banks? Basically quiet?
Range-bound. Energy was reacting to inventory comments and macro chatter, so you saw divergence inside the group. Banks were similarly split as credit and rate expectation narratives kept trading ranges tight.
Got it. Some single-name moves made headlines today. Walk me through a few that mattered.
Twilio jumped after a Goldman Sachs initiation, which shows how analyst coverage changes can quickly re-rate a software or communications name. Rock slid roughly 15% after an acquisition announcement the market didn't like. Deal terms can bite smaller names hard. Microsoft traded near a 52-week low intraday as profit-taking hit broader tech. Tesla faced fresh headline risk from a lawsuit tied to a fatal crash in Texas, which added episodic volatility. A utility, CMS Energy, announced a new executive appointment, and Disney had an insider Form 4 filing that traders flagged. Crypto-related equities slipped as Bitcoin pulled back, underscoring the correlation in that subgroup.
Wow. So we've got legal, corporate actions, analyst calls, all creating these pockets of volatility.
Yeah, and that's the point. When breadth is narrow, name-specific headlines matter more. A single large-cap downdraft can tilt headline performance, even if the broader market is fairly mixed.
I mean, when you step back and look at this, it feels like investors are just waiting for a bigger macro cue.
Exactly. Today wasn't about the economic data. The calendar wasn't the main driver. It was about positioning ahead of bigger macro events. Folks are parsing inflation readings in labor market reports because those directly affect Fed decisions.
Quick explainer for folks. How does a hotter inflation print hit the market?
If inflation surprises to the upside, it raises the odds the Fed stays hawkish, which tends to push long-term interest rates up. Higher rates hurt long-duration assets most. Think growth and big tech, because the math on future earnings gets discounted more steeply. So a hotter inflation print can re-accelerate rate hike expectations and pressure those names.
And the flip side?
If inflation continues to moderate, it relieves pressure on long-duration assets and could bring growth leadership back. But until we see a convincing trend, analysts remain cautious because the path is data-dependent.
Yeah, analysts note that narrow leadership is a vulnerability. Tell me about the technicals. Any key levels traders were watching?
For the S&P, near-term support was around recent intraday lows and the consolidation band we've been in. For the Nasdaq, traders were eyeing swing lows from recent sessions as key support. The Russell holding up suggested internal breadth could support risk in smaller names, but technically, a break in either the S&P or the Nasdaq below those levels would invite more aggressive repositioning.
Short reaction?
Right. Traders are essentially watching whether QQQ can stabilize above those recent intra-session lows and whether SPY can hold this narrow range.
Okay, looking ahead. What should listeners keep an eye on for the next session?
Macro and Fed commentary will be front and center. Any Fed speak or inflation prints could move the tape. Earnings and analyst coverage in software, communications, and retail will be particularly influential. Legal and corporate headlines, like developments around Tesla or the fallout from ROC's deal, can produce abrupt single-name moves. And crypto prices. If Bitcoin keeps sliding, that subgroup will stay under pressure.
Honest question. Do you think this is the start of a bigger rotation away from growth, or just a temporary reshuffle?
I think it's a reshuffle for now. The data suggests rotation into smaller and more cyclical names, but without a clear macro catalyst, it's hard to call a structural change. The next meaningful move will likely come from macro surprises or a large cap specific catalyst.
Yeah, that tracks.
Bottom line, today looked like a market catching its breath. Headline-driven pockets produce strength and weakness, and the small cap resilience suggests traders were nibbling at higher beta exposure. But the narrow leadership profile leaves averages exposed to episodic volatility.
Quick wrap-up. Give me 3 clear takeaways for listeners.
1. Broad market was essentially flat, while tech lagged and small caps outperformed. Classic rotation. 2. Headline-driven sectors like cannabis and certain retail ad names showed episodic strength, so news flow mattered. 3. The Fed and inflation data remain the main potential catalysts. Markets are data-dependent, and narrow leadership increases headline sensitivity.
Perfect. If you want to summarize in one sentence?
Neutral to cautious near term. Rotation, not panic, but vigilance for macro or name-specific surprises.
All right. Thanks, Josh. Always great context from you.
Thanks. Good conversation. And remember, this analysis is for informational purposes only. It isn't investment advice. Analysts note trends and risks, but everyone should do their own research.
Good reminder. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you after the next close.